Ladies and gentlemen, good day, and welcome to WPIL Limited Q1 FY27 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Balasubramanian. Thank you, and over to you, sir.
Thank you. Good evening, everyone. On behalf of Arihant Capital, I welcome you to the earnings of WPIL Limited Q1FY27 conference call. We have with us today Mr. Prakash Agarwal, Managing Director, and Mr. Krishna Kumar Kaneriwala, Executive Director. I shall now hand over the call to the management for the opening remarks, following which we'll have opened the floor for Q&A. Over to you, sir.
Thank you. Good evening, everyone. It is a pleasure to welcome you all to our earnings conference call for the first quarter of financial year 2027. Let me take you through the financial performance of the company, followed by operational highlights and questions. On a consolidated basis, revenue from operation for the quarter under review stood at 501 crores, a substantial increase of 32% year-on-year. EBITDA stood at 75 crores, while EBITDA margins were at 15.04%. PAT stood at 59 crores with PAT margins at 11.79%. On a standalone basis, revenue for the quarter stood at 115 crores, down by 37% year-on-year, while EBITDA stood at 14 crores, EBITDA margins were 12.21%, net profit stood at 6 crores with PAT margins at 5.41%. At the end of Q1, the total order book stood at 5270 crores, providing healthy revenue visibility across both our international and domestic business. For the international business, we continue to witness strong momentum across both our product and project operations. International revenues for the quarter increased substantially to 386 crores compared to 197 crores in the corresponding period last year. While international EBITDA margins improved materially to 15%, the international order book stood at 2891 crores, providing strong revenue visibility over the medium term. With our international product business, Grupo Aturia continued to witness fresh demand from the MENA region across both oil and gas and water sectors, supported by robust demand for gas turbine pumps. Our Australian business, Sterling and United, continued to benefit from healthy inquiry pipelines from LNG, mining and industrial projects, while WPIL Thailand continued to secure healthy orders from the Thai drainage sector. On the international project side, MISA Italy has successfully completed all its legacy projects and is witnessing a healthy pipeline of new irrigation and drainage businesses. PCI Africa has commenced execution of large contracts secured during FY26 in the South African water sector and is expected to gain further momentum as the year progresses, supported by a strong order pipeline and an attractive margin profile. Moving to the domestic business, the product division continued to witness healthy momentum during the quarter. Domestic product division revenue stood at 72 crores compared to 65 in the corresponding quarter last year. Order intake remained healthy with the domestic product division order book at 459 crores at the end of the quarter, providing healthy revenue visibility. We continue to witness good traction in revenues and order inflows across the power and irrigation sectors, supported by a robust inquiry pipeline. We remain focused on expanding our export business, which continues to provide attractive long-term growth opportunities. The domestic project division remained subdued during the quarter with revenues for the quarter at 43 crores. Our focus continues to remain on project commissioning and commencement of operation and maintenance activities. The domestic project order book stood at 1921 crores with about 530 crores of O&M business. We expect an improvement in the domestic water sector during the second half of the year as the sector issues are resolved. With this, we can now open the floor for questions, please.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use a handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Divyansh from Trinetra Asset Managers. Please go ahead.
Hello. Good evening, sir. Thank you for the opportunity. So my first question was regarding the margin. So currently the war is going in the West world. So is there any effect in the RM prices and the procurement?
No, our margins are quite stable across our business.
Okay, and we are not like any problem is not there regarding raw material due to war?
No, most of our raw material is steel. So, we are metals and steel. There was a short spike when a lot of materials were not being exported from the Middle East. But I think it is balanced out, and in our contract, which are pretty medium term, long term in nature, so it's not much of an impact.
Okay, and the next question was like the order book which we have from the PM Jal Nigam. So can you explain that all the order book which at the price which we are getting. So in this project, the margins which are carrying is what the business were like looking for it.
Yeah, most of our project work has got price variation contracts, so therefore that takes care of it, which are longer term, and otherwise not much of a concern on margins.
Okay, thank you, sir.
Thank you. The next question comes from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Thank you. Prakash ji, you have delivered a very good result in this quarter. I would like to ask, this enhanced margin which you booked in quarter one, it will be follow in next few quarter?
Our consolidated margin has hit 15%, and our standard range is between 15 and 20. So we should see it improving only further.
Okay. And this 1029 crore is our standalone order, and 4200 is our consolidated order. Is it correct?
No, I think we have given product order of 1000. The product business order is 1029, and the project order is 4241.
1029 is product order.
Yeah, product order only, and there is a division of 55% international and 45% domestic.
And what about 4241?
That is projects. And again, you will see there, yeah, about 55% again there also international, and 45% domestic.
What problem we faces from MP government?
We had they I think gave us a debarment notice saying that basically they pointed out that various projects were moving slow. So we are addressing those concerns that they have raised. They gave us a debarment basically saying that you cannot bid for new projects until you finish the old projects. And we are addressing those concerns, and hopefully we can resolve the issue soon.
Okay. And by the way, up to what time period these projects will be completed of MP government?
Our target is within, say, the next 1 year.
Okay.
They're quite advanced. Most projects are at 65 to 70% completion.
Okay. And sir, what is our margin in O&M work?
It is higher than normal margins on EPC contract, and however, we'll be able to give you a better picture when most of the projects start O&M.
Okay. Thank you. All the best.
Which is next year.
Okay.
Thank you. The next question comes from the line of Saket Kapoor from Kapoor Company. Please go ahead.
जी नमस्कार प्रकाश जी नमस्कार के साहब and thank you firstly for the opportunity. So just to get the number right, 1029 crore is the product division order book and 4240 is the project and 530 is the O&M part which is embedded in 4240.
Yes.
Okay. Sir, can you please explain what exactly led to our standalone numbers, the EBITDA margins declining to sub-optimum number of 5%? It is only the underutilization in the project business, or what has led to these and how is things going to get aligned going ahead, sir?
Only due to the project invoicing, which is very drastically lower because the sector is still facing problems. Our funds are not yet released. So I think these are sector issues and all people in this sector are facing it. Hopefully, we were expecting by this quarter to have resolved matters, but I expect in the second quarter it should happen now. So we are patiently waiting.
Okay. Sir, can you quantify what is the slow-moving order book for the project business in the domestic market? I think that it's pertaining, to the Jal Jeevan scheme, both for center and state.
So it is only the Jal Jeevan projects which we are primarily exposed there right now. Those are slow-moving, and that is states but supported by center. It's a joint effort. So hopefully that will get resolved and invoicing can pick up in the second half of the year.
Okay. I'm just trying to quantify out of the total order book in the project business of 4240.
So if the total order book is 1400 crores, most of it is from Jal Jeevan.
Our domestic project order book is 1400 crores.
EPC and 530 crores of O&M.
Okay, 1400 plus 530. Your voice is breaking, sir. Come again.
Yes.
1400 is EPC and 530 is the O&M part. Sir,
yes.
Just to dwell only on the project business, then I'll come to the product part. Even if we take the console number also, I think we won very big, large orders in our South African entity. So there also for this quarter, although the revenue booking is good, but the margins profile seems to be lower. So can you throw some more light on how the project execution pace is gathering momentum, especially to the South African project, and what should be in the annual going ahead?
I don't know. I don't understand your question. But
I'll again reframe it, sir.
Let me explain. The consolidated margins have gone up to 15%, which was our target. And the South African business, as we have earlier mentioned, is 3 to 4 year contracts. So they are supposed to pick up. This is the business has started contributing to our revenues, as you can see, by the drastic increase in international business. And this will further increase during this period.
Okay. Why I was mentioning it was because of the June quarter, the revenue profile for project is 260 crore, vis-a-vis 226 for March, whereas the profitability is down to 19 crore. So that was the reason. Even if we net off our domestic underperformance, the profitability for the project business as a separate entity is down. So what factors have led to that? The entire overall is 15% EBITDA is correct, but for the project, even on a consolidated basis, it is lower. So if you could just throw some more light.
I'm not sure how you got these numbers.
Sir, I'll just come again. It is on the segmental revenue, on the gross segment revenue.
The revenue is mentioned, but the profitability is not mentioned.
Yes, it is mentioned there, sir. Work contract is 19 crore, the project part. Just the second line item, sir. From
Sorry, I don't have the data, so I can't answer this.
this is what is being exchanged, submitted to the stock exchanges.
Can we move on?
Yes, sir, we can move on. Sir, so the third part of it is attributing to the product business, even taking into account how the quarter one performance have been. What should we envisage going ahead in terms of the product business execution cycle? How will it gain traction, and what is the executable period of the total product closing order book?
I think the order book is moving well and the operation for product is stable. So it will move along in the same manner it is moving along.
नहीं सर, 1029 करोड़ ऑर्डर बुक का एग्जीक्यूशन पीरियड क्या है? साल भर के है कि हायर?
Yes, sir. It's not, it's consistent with the performance of product division. Like you can see, the revenue is growing in the product division. It will continue to maintain this growth.
I'm joining with you, sir. Thank you once again.
Thank you. The next question comes from the line of Jainam Doshi from Chris PMS. Please go ahead.
Yeah, congratulations on a great set of numbers, sir. So first question is with respect to like the domestic project business. Due to the ongoing crisis, like government had diverted certain funds to other clauses. So, like, do we see any compromise here on in the JJM 2.0 allocation, or we feel water will remain the priority and the funds will be released for the JJM thing?
Yeah, this is a good question, and I completely believe that the sector remains a priority and the funds will be released, and future there will be good traction in opportunity. However, we are trying to de-risk ourselves and manage in the best manner possible. The future outlook remains good or even better.
Great, sir. Great, sir. And with respect to the outstanding receivables from the JJM, we expect the realizations to be kicking in from this quarter onwards, like a small portion? Yeah.
Yes. We believe there will be a substantial inflow this quarter.
Understood. Understood. And with respect to the South African projects, like for the two projects we had one earlier, so like since the execution has started, so like we have completed the engineering and designing phase for them and we have actually started the execution, or where are we at this stage with respect to the projects?
The newer projects will take some time, but this is the first, this business was acquired by us in May last year. So this is the first time we are getting their first quarter. And this is normal run rate for the business. This will further pick up once these newer projects move into execution.
Got it. Got it. Great, sir. Thank you. Thank you. That was from my side.
Thank you. The next question comes from the line of Dia Jain from Sapphire Capital. Please go ahead.
So thank you for the opportunity. Can you please provide the margins in the product and the project divisions, and also the domestic and international margins in the two segments?
All our businesses, our aim is to operate between 15 and 20%. And this is something which we have seen is consistent with the performance. And I think there is minor fluctuations from quarter to quarter, division to division. But overall, in a year, we find that it is in this range, roughly around 17%, I think we get, 16-17%.
Okay, sir. And how much capex are we planning this year?
Nothing substantial.
Okay, sir. I'll get back in the queue.
Yeah.
Thank you. The next question comes from the line of Deepak Purswani from Swan Investment. Please go ahead.
Yeah. Hi. Good evening, sir. Thank you for the opportunity. Sir, my question is again related to the margin only. If we look into the result press release which we have filed with the exchange, on the page number 7, we have given the segmental data. Right? In that segmental data, if we look into the project level segmental results, it is showing 19 crore, which is a 7% margin.
Okay.
So just wanted to get the sense, sir, from this perspective, if you can just give us a project level margin profile, how that is shaping up in the South African business and how that is shaping up in the Indian business. And on the sustainable basis, what should we consider?
This would be affected by the Indian project business, which has pulled down the operations. And overall, as I said, please stick to this, that they will be operating between 15 to 20% EBITDA margin. So I think
at this point of time, there is no escalation or provision booked in this number. These are the normal numbers. Would that be fair to assume? Or?
Yeah, the Indian operation revenues are very low. They have drastically fallen down, if you observe that. That will indicate that the operating costs obviously have affected the margins because the revenue has fallen down. And that has affected this project area of the international.
Okay. And even South African business operation margin profile would inch up to the 15% over a period of time. Would that be the fair understanding?
Yes, of course. That's what I'm saying. So that's the good basis to take. And I expect Indian business to also pick up as the year goes by. Second half is expected. So this will also calibrate upwards.
Okay. And secondly, sir, if you can also share, broader strategic understanding about how we are looking into our various subsidy stake profile at current level, because in most of the subsidies we have the stake to the extent of 50 to 63%. So as a result, at this point of time, minority share is going at a higher level at the current juncture. So if you can share, can you please share your thought? How should we see this, whether this should increase going ahead in some of the key subsidiaries in the product and also in the project business in the South African subsidiary? If you can share your broader thought process on this part.
So again, it's a good point, and our intention is to reduce the minority shareholding on all our subsidiaries over the, say medium 2 to 3 years time. Say, for example, in this new acquisition PCI, we have an understanding that in 3 years, we will buy out the other shareholders. So then that will climb to 100%. And similarly, in our other South African business, and then in Singapore also, we are thinking how to, when we have recourse to funds, we would again dilute the promoter shareholding there. So we want to reduce minority shareholding going forward.
Okay. Thank you and wish you all the best, sir.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants, to ask a question, please press star and 1. The next question comes from the line of Shubhamkar Oja from SKS Capital. Please go ahead.
Yeah, hi, just a quick data point, sir. So what is the total JJM receivable spending as in today? And how much of that, you mentioned that you expect a substantial amount to flow through in quarter 2. So how much is pending basically?
Roughly, I think 300 to 350 crores, and we should get a majority of that.
You received anything at all in quarter 1, sir?
No, it's all linked to, there is no, it's not a thing that there is, they will disperse slowly the funds. It's all procedural in nature. So if it is dispersed, most of it will get dispersed. It's all lying as payable in the accounts of the treasury accounts.
Okay, got that. And out of this 1400 crores of EPC work that is pending, how much of that you expect to be executed for the rest of the year? You said H2 is going to see some acceleration in the execution. Yeah. By when do you think this is going to be executed? And is there any slow moving order out of this 1400 crore?
Yeah, it's all related to the payments are primarily, primarily in West Bengal. So there the funds have been disbursed by center. It is lying there. And I think this should accelerate the execution of those contracts. A major amount will get executed in this year, provided this starts gaining momentum.
Okay. Okay. All right, sir. Thank you and good luck, sir.
Thank you.
Thank you. The next question comes from the line of Saket Kapoor from Kapoor Company. Please go
Yes,
ahead.
sir. Just in continuation to it, sir, 300 to 350 crore is the receivable, and that is pertaining to both the state government of Madhya Pradesh and West Bengal, or are the receivables only from the MP government?
So mostly from West Bengal government, less from MP government.
Okay. Okay. So I think, sir, there was some ad hoc payment or something that we wrote back for the MP project also. What is the status, and how will this debarring for the same will affect our the reports of the same?
Sorry, I don't know what you are mentioning about write back ad hoc, what you are saying.
Okay, sir. I'll just repeat it once again. I think so 2-3 quarters ago, we did some write back on account of some EPC projects there being some valuation, when written back were done in the PNL pertaining to some MP projects because of some execution delay or.
I'm not sure what you are referring to right now, so what was the question?
My question was pertaining to that only. I think that there was some for some projects there were some write backs we have done even post the execution. Your EPC being an EPC player, our money was stuck there. I think for the MP projects only. Maybe three quarters ago.
2.5 years ago, one contract was terminated, and that was the amount which was adjusted or booked. So
okay.
I don't know.
So what is the status on the?
Nothing has happened in the last 2-3 quarters.
Okay. Now, what is the status of the same, sir? I think so that amount we are contesting.
No, it's in litigation. It's in litigation. That termination was in litigation. It's moved from arbitration. It is into arbitration right now.
Okay. And I think, sir, our foreign subsidiary sale of Ruchi was also, there were some tax issues which you were taking some consultation regarding it, and we paid an amount also there just as a precautionary measure. So what is the update on that part?
I think it is, there was 2 parts. One major part was in Switzerland, and there was a minor part in France. In France, we got a favorable reply, so that is good for us. And we are claiming the money back. And in Switzerland, it is not reached the stage yet. It will take time.
Okay. And what is the cash on books currently? Total cash, how much we are holding?
I'm sorry, I don't have that right now.
Okay. And if we take the run rate of 500 crores, is this should be a new normal for us, taking into account the closing order book for both the project and the product segment. And I think so Q1Q also we have maintained the run rate at 511 was March and 500 for this quarter. So is this the new normal we can take forward for the current financial year?
I think the revenues should be improved. I think this is looking stable now. I think so I think unless something changes, the world is very volatile right now. So like I mentioned, some of the, the good things, like India hopefully should perform better. This is very low, the revenues. But depends on this quarter what happens. So,
no,
but otherwise, more or less in line, yeah.
More or less in line. Correct, sir. And for the minority part, sir, we will be getting update during the course of the year, or it will be a 2-3 years.
No. Something it will be strategically done when the time comes. Like one I mentioned to you, one is contractually bound, and the others are depending on cash situation. So I don't think we can be discussing this on regular basis.
Okay.
Okay.
Okay, sir. All the best to the team, sir, and thank you for answering the questions. Thank you, sir.
Thank you. A reminder to all the participants, to ask a question, please press star and 1. I repeat, to ask a question, please press star and 1. The next question comes from the line of Praveen Chandra Patel, who is an individual investor. Please go ahead.
Right, sir. I want to ask that what is about NSE listing?
I think now it is you can trade on NSE. I understand. Already you can trade on NSE by segment to segment process or something.
Okay. Thank you, sir.
Thank you. Reminder, to ask a question, please press star and 1. A reminder to all the participants, to ask a question, please press star and 1. The next question comes from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yes, sir. Just a small point. For share of profit of associates and joint ventures, we have booked a profit of 11.24 crores. So can you please explain the nature of the same?
It is from profit from our joint ventures. We have 2 joint ventures primarily in Thailand and in India with Clyde. So both we have, one we have 49%, one we have 40%.
Okay, and this profitability is pertaining to which segment, product or project?
I don't have the details now, but both are, have performed well.
Okay, and this is one of profitability that we have gone through, because 11 crore is a significant number. Last year, the entire year we had a profit of only 8 crore.
No, they are performing well. I hope the trend continues.
Okay, sir. Thank you, sir. That's all from me.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Thank you, and over to you.
Thank you all for participating in this earnings conference call. I hope we were able to answer your questions and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relation manager at Valorium Advisor. Thank you and good night.
Thank you. On behalf of Arihant Capital Markets Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.